Pharmaceutical major Dr. Reddy's Laboratories is slated to release its earnings report, marking a shift from previous quarters of solid growth. The company's net profit is expected to remain flattish on year. Varsha brings in more. What can be expected?
Company is going to report its number today, wherein revenue is expected to rise 14%, while EBITDA is expected to rise 13%, and margin is expected at 27.8% versus 28% last year, while net profit is expected to rise 10%. Now let's see what are the key highlights for the company, what will lead to this growth. So there will be lower gRevlimid contribution. Now gRevlimid is a cancer drug which has been the growth driver for the company. US business is expected to see quarter-on-quarter decline due to lower gRevlimid sales. Now gRevlimid treats cancer. Domestic formulation sales is expected to grow at 15% year-on-year, which will be driven by integration of the Sanofi portfolio that they've acquired, and the nicotine replacement therapy business is also expected to support the growth. The key things that one should watch is potential drug launches that the company will see, and of course the strategies to offset the revenue losses following gRevlimid's expiry, which will be expired in July 2026, and biosimilar pipeline, which company is actually bullish on. We need to see what is the pipeline products, and outlook on margins is what will be awaited. Axis Securities forecast almost $310 million in base business revenue in US, and they expect $140 million from gRevlimid in US, and they are expecting overall flat sequential growth in US driven by stable gRevlimid contribution, while HDFC projects sequential decline in US due to again lower gRevlimid sales, and they expect steady base business at $285 to $290 million.
Thanks, Varsha, for that. Now, the government is expected to announce the next phase of the asset monetization pipeline with a higher outlay in the upcoming budget. The next phase will focus on asset recycling, aiming to generate funds for reinvestment in critical infrastructure. Shrimi joins in with more details on this.
Yeah, clearly budget is expected to, have an enhanced focus on the asset monetization. As you know, it's critical in terms of financing the infrastructure development in the country while, attracting the private investment. So sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards, that is FY26. In fact, a lot of focus would be on the asset recycling, wherein resource is getting generated to have a reinvestment from the public sector and also the fresh investment from the private sector. In fact, a lot of, sectors is going to be prioritized in the next phase, which include petroleum, mining, airports, highways, metro network, and in fact, railways will see a lot of action, which was missing in the first phase of the pipeline, which was launched 4 years ago with an ambitious target of 6 lakh crore. Now, in the first 3 years, the pipeline is able to, raise around 4 trillion, and in the ongoing fiscal, because the scheme is getting ended this fiscal itself, is going to sort of generate around 2 trillion is what the anticipation is. So clearly it's going to, exceed the estimates, and that's why the government is, planning to, come up with the second phase of this scheme, and with a clear intent to how to sort of unlock the value of the public sector assets through the private sector participation, and plus how to sort of utilize the underutilized asset and those assets which are not able to sort of give the optimal return so far. So clearly we are going to see, announcement in this regard in the upcoming budget.